What if the next crisis in America doesn't come from stocks or banks, but from oil? Right now, a dangerous situation is building: war tension, unstable peace talks, and a global supply squeeze. And if this continues, it won't just affect markets, it will affect your daily life. Let's start simple. The tension between the United States and Iran is rising again. Peace talks are uncertain. Trust is low. Because of this, diplomatic negotiations are fragile. Military pressure is increasing. Global markets are becoming nervous. When talks fail, supply chains get disrupted. And that's exactly what we're seeing. There is one place controlling this entire situation: the Strait of Hormuz. This is one of the most important oil routes in the world. Around 20% of global oil supply passes through here. Any disruption here impacts the entire world. Now the problem: ship movement is restricted. Oil flow has dropped sharply. Supply is no longer stable. This is not a small issue. This is a global energy choke point. Let's understand the scale. Oil supply is not just slowing, it is shrinking. Key points: millions of barrels per day are affected. Global supply has dropped significantly. Emergency reserves are being used. But here's the reality: reserves can delay the crisis. They cannot solve it. So the system is under pressure. Now let's connect this to something you feel directly: fuel prices. When supply goes down and demand stays high, prices increase. That's exactly what's happening. Oil prices are rising globally. Gas and diesel costs are increasing. Transportation is becoming expensive. This leads to higher inflation, more expensive goods, increased cost of living. Now here's the critical part. The United States consumes around 20 million barrels of oil every day. That's massive. Oil is not just for cars. It powers transport systems, airlines, factories, food supply chains. So when global supply is affected, America feels it immediately. Let's break the chain reaction clearly. Supply drops, prices rise, demand gets affected, economy slows down. This is a pattern seen many times in history. Oil shocks often lead to economic slowdown or recession. Now, this is the most important insight. If the situation worsens, it won't just increase prices, it will change behavior. Possible outcomes: people travel less, flights reduce, businesses cut operations, fuel usage becomes controlled. In extreme cases, governments may limit fuel usage. This creates a situation similar to a lockdown, not because of a virus, but because of limited energy supply. This is not a normal price increase. This situation is different because it is driven by geopolitical tension. It directly affects supply routes. It involves multiple countries. And most importantly, it's not just about price. It's about availability. Let's look at what could happen next. Scenario 1. Peace agreement. Supply stabilizes. Prices come down. Scenario 2. Ongoing tension. Prices remain high. Markets stay unstable. Scenario 3. Escalation. Supply drops further. Prices spike sharply. Economic pressure increases. Right now, the world is between ongoing tension and escalation. This is bigger than oil. It's a chain reaction: war, supply disruption, price shock, economic impact. And the biggest risk is simple: modern life depends heavily on oil. So when you hear the oil shock is coming, understand this clearly. It's not just a headline, it's a warning. Because if supply continues to tighten, this impact will reach every country, every business, and every household. Comment below. Do you think this situation will stabilize or turn into a bigger crisis? And subscribe for clear, simple, and powerful finance explanations.